Hey everyone, happy
Hi.
Wednesday. How are you guys doing? We are back with our weekly live. We do this live every Wednesday, 1 p.m. Eastern Standard Time. My name is Bola Shokumbi. I'm the founder and CEO of Clever Finance. We're an online financial education slash media company. And my amazing co-host, Yasmer, will introduce herself.
Hey everyone, I'm Yasmir. I'm the content creator for Clever Girl Finance, joining you from New York City.
Yes, so today we're going to be talking about navigating a recession, which is kind of what we're in right now in the US and maybe even globally, and times of high inflation. So, as you're joining us, please share in the comments how you are navigating inflation right now. Are you feeling it? Are you not feeling it so much? How are you powering through? I am definitely feeling it at the gas pump. Um, with the groceries. So I would love to know because these are expensive times. So we're going to be sharing some key tips for navigating a recession, how to plan your finances. And we're going to talk about, inflation as well and just being able to get through this because things get, more expensive. So share in the comments. I'd love to know. And also, where are you guys joining from? Hello, 13 Wolves. Hello, Esther. Hello, Sonia, Barbara. Thank you guys for making time to join us. So, as you're sharing in the comments, quick announcements. We are less than 2 weeks before this book comes out. So exciting.
Yes.
So the actual copies have started shipping as of June 20th. So the hardcover versions are going to be hitting your mailboxes soon. If you get this book, if you already pre-ordered it, please tag Clever Girl Finance or Abola Shokumbi on social media so that we can share it as well. And then we have the book event in New York City on July 9th. Saturday, July 9th, which is in about 2 weeks as well. So we would love to see you if you're in New York City. You can find the details on Instagram, on bolashokumi.com, on cleverfinance.com. And we are actually doing a 2 ticket giveaway for the New York City event on our Instagram stories right now at Clever Girl Finance. So pick up a copy of this book, pre-order it if you haven't already done so. I would appreciate your support. So yeah, Yasner, let's get into this very, very important topic.
Yes, it's very important, as you mentioned, Bola, because we're kind of in a recession right now. I am also feeling it a lot with food.
Mhm.
Even my pet's food has gone up, so it's tough. And that word recession comes with a lot of negativity, like job loss and
Yes.
the market dipping. So today we're gonna talk about like what is exactly a recession and some tips that you action tips you can take now so that it's the recession is not hurting your pockets too hard.
Yeah, so a recession is something that it's a normal economic occurrence. Recessions happen because economies go through periods of expansion and growth, and then they go through periods of decline and recession. And for example, we saw the incredible housing bubble in 2008 and that decline. And then, in the aftermath of COVID-19 and crisis in Ukraine that's impacting the global economy, we're starting to see the effects of a recession right now. And what happens is that there's a decline in industry and trade activity, which means job losses, unemployment, real estate values may drop, investment values may drop. You may have been seeing the stock market right now, and as a result, cost of goods and services goes up. Things get more expensive, but your income does not go up as the costs are going up, right? So a recession is basically a period of decline in an economy. Costs go up, income does not necessarily go up, job losses are high, investments are low in the sense that you might be seeing declines in your investment, but depending on your horizon, this is essentially a time to buy if you have the income to support it. So yeah, so let's talk about some of these tips specifically during these times of recession and inflation. Esther said things are very expensive. Sonia says she stockpiling the daily essentials and giving kids salads for snacks. Yeah, it's pretty expensive right now.
Yeah, so the first thing you probably want to do is get on top of your budget, because this is going to help you see like where you can save money, cut things out, and also allow you to see like how much you can put towards savings or how much you can put towards debt. So very important that, that would be the number one thing you do right now.
Yeah, so when you're hearing talk of recession, talk of inflation, and you're experiencing it for yourself, for example, I definitely feel it at the grocery store. I feel it when I'm buying gas. This is a great time to really take a look at your budget and reassess your expenses, right? So are there opportunities for you to cut back in your budget? Can you trim some of the fat from your budget? Review those expenses in detail and see what opportunities you have to save extra money, maybe towards putting the money towards savings, because cash is queen in times like this, because down, you don't want to be cashing out your investment, so you want to have money, cash income coming in. So can you put some of the money towards savings? Can you use it to pay down debts? And again, this is a great time to invest in the stock market, because essentially the stock market is on sale. However, I will caution that you cannot predict the bottom of the market in a recession. We don't know how low it's going to go. We just know that it's low right now, right? And so what you can do is invest. If you are employed and you have emergency savings and you have the extra income to invest, is to invest on a dollar cost averaging basis, which is essentially buying stocks consistently with a fixed amount over an extended period of time. So every week, let's say you buy $100 of stocks, or every month you buy $500 of stocks. If you have $5,000, you split it into $500 purchases every month, for example. So you're purchasing the market at various instances, and over time you're drawing an average purchase price. So that can help you, weather through the low of the low if we haven't gotten to the low yet. And then it's also really important that you diversify your investments. There's a lot of noise on social media about what is the best investment. Diversification is the best way to invest. So again, broad funds, index funds, ETFs. We talk about this on cleverfinance.com, the blog. We have tons of articles on investments. Just visit cleverfinance.com/blog, and we have our completely free investing courses on the site as well. So number one, get on top of your budget. So key. Where can you trim the fat? How can you save more money? How can you put extra money towards debt? How can you invest more since the stock market is on sale?
Mhm. Yes, and that's a good segue to tip number two, is to diversify your investments. You probably heard the saying, "Don't put all your eggs in one basket." Well, that applies here with investing. Some people will invest in just the stocks, just individual stocks, and that could be risky. You can lose a lot of money, if not all, if that company is not doing well. So you want to do your research and look into investing instead in index and mutual funds, which are diversified. They include a lot of companies on there, and the great thing about them is that if one area or one company is not doing well, and by area I mean like like the tech company, oil and gas, things like that. If they're not doing well, then you're not gonna feel it as much, because if they're not doing well, then there's other stocks that are in this time. And also assess your
Mm.
risk tolerance, because if you don't feel comfortable with like your portfolio going down, you might want to reassess that, and make some changes.
Yeah, so there's nothing against investing in individual stocks. You just want to make sure that you're diversified across several different individual stocks. And when you are investing in index funds versus mutual funds, one thing to keep in mind is that mutual funds typically have fund managers, which in turn cause the expenses associated to that fund to be higher than an index fund, which is essentially just tracking a stock market index like the S&P 500. But sometimes, if you are investing in an employer sponsored account, you may only have access to mutual funds, but the cost of the stocks are much lower right now. So it's still worthwhile to invest. So diversification is so important. A lot of people panic right now and they sell. I find it so weird that people buy high and then economic situations happen and then they sell low, that's losing money, right? You want to buy low as low as possible and then sell high, which is when you make money. So budget, get on top of your budget, trim your expenses where you can, right? Cash is queen right now. Diversify your investments. If you have the spare funds, now is a great time to invest additional money or just continue investing on a dollar cost average approach.
Yes, tip number 3 is to bulk up your emergency savings. You want to start bulking up so that you have at least 3 to 6 months worth of expenses, not what you earn. Some people think that they have to save up what they earn each month for. No, it's just like what you need, like the bare minimum. So aim for 3 to 6 months and then move towards 12 months. Reason being is that you can experience unemployment, and you're gonna need that because in times of recession, like it's hard to get a job, and it may be a while before you land a new job.
Okay, so someone is watching this and saying, these women are crazy, telling me to save 3 to 6 months and 12 months of my income. Y'all are crazy. Don't hang up. Don't cut off the just wait. So in a recession, having an emergency fund is essential, just in general, but more so in a recession because the job market, job security, there's a lot of unpredictability there. If your companies are doing well, the next step they take is layoffs, right? And when you're out of a job, you still need to pay your bills. And so if you are gainfully employed right now, if you are bringing an income in, please prioritize emergency savings. It might mean just putting a pause on paying extra payments to your debt so that you can put some cash aside, right? Continue to make the minimum payments on your debt, but put some cash aside so that you have a fallback. And so 3 to 6 months, as Yasmer said, this is not your entire paycheck. This is essentially you narrowing it down to what do you need to survive? Housing, food, transportation, your core utilities, your water bill, your electric bill, your internet bill to find a new job, any medicines you need. What is that amount? Cut off all the fat, the eating out, the nails done, all that stuff, right? You want to have survival money put aside 3 to 6 months. Once you get there, then you can plan to extend it to 12 months. The reason why we say 12 months as a goal is because during a recession, it's harder. It takes more time. It can take more time to find a job if you lose your job. So if you are employed right now, please prioritize saving for emergencies. If you are unemployed right now during this time of inflation, recession, start thinking about what you can do to weather through until you get a job, without having emergency savings until you have that income that is stabilized. So, and once that income starts coming in, you focus on emergency savings. But right now, can you downsize? Can you work a part-time job? Can you work at a job that maybe is lower than your skill set, but will bring money in to put food on the table and keep your bills paid? Can you sell items you own that you don't need, but somebody else wants to buy them on Facebook Marketplace, on eBay, on Poshmark? You want to start considering all these ideas. So you might be unemployed right now. You cannot save, obviously, because there's no income coming in. But what can you do? How can you get creative to weather through this storm until you get that job and your income stabilizes, and then you can start to prioritize emergency savings?
Mhm. Tip number 4 is to create multiple streams of income. So, the average millionaire has 7 streams of income. And this is good because you want to have as much money coming in as possible. So, you may want to start with like exploring what your passions are, and if you can turn it into, a blog or like a ebook or class. This is a good way to earn money. And if you are unemployed, you might want to also explore, maybe this is the time where you want to work on a passion project and monetize from it. A lot of people during the pandemic, a lot of people are like out of necessity. They worked on their businesses, and some of them even like quit their jobs when they saw that they were making more than what they were doing in their job. So, or it can just be a side hustle. But yeah, very important to not just have one stream of income, but multiple ones.
Yes, multiple streams of income is incredibly important. Yes, you're budgeting. Yes, you're managing. Living within your income. Yes, you're investing or you're paying off debt. Yes, you have emergency savings, but it's important to have that multiple stream of income so that if you lose one source of income, you have a fallback. If it takes you time to recover, the income stream that you lost. And what's really interesting about recessions is that if you Google the studies and statistics, is that recessions and times of economic difficulty usually produce the highest number of millionaires in pretty much every economy, because when recessions happen, when things get tight, people get serious, people get creative, and people find other opportunities. So in this recession, even though the news is all doom and gloom, there are opportunities. So don't buy into the doom and gloom, because once you shift your focus into doom and gloom, recession, woe is me, you are shifting your focus away from being able to identify potential opportunities. So when it comes to multiple streams of income, is there a business idea you've been wanting to pursue that maybe you can start now at a low cost? Are there things in your home you just need to downsize and bring money in to build up your emergency savings, to start that business, to pay down some debts? Start getting creative. Investing is one way to create a multiple stream of income. However, that takes time to build up, right? Because the income comes from the appreciation and increase in value on your investment. So you have to basically invest to build up that value and that dividend, those dividends and appreciation and all of that. But that's still one long-term way to build a stream of income. Your full-time job is one stream of income. A part-time job is one stream of income. If you're selling things in your home you don't need, baby clothes, appliances, furniture that's just hanging around, that's another stream of income. Those are 4 streams of income I just talked about, right? So start thinking of ideas. On Clever Wealth Finance, we have a few articles on passive income ideas, how to create multiple streams of income, ideas for multiple streams of income. So definitely check it out. In times of recession, the businesses that tend to do the best, and I was just looking at a list, are anything that has to do with essentials, right? So the food industry, grocery stores, baby products. People are always going to clothe and feed their babies. Services like legal services, accounting services, repair services. People need to get to work. They're going to fix their cars. They're going to fix things in their home. They need to live in their house. So anything that's an essential service that you have identified as essential to living, people are still going to pay for it. So that could be an opportunity if you have the skill set or you have the interest to start a business to create another stream of income for yourself. If you are unemployed right now, now is a great time to explore multiple streams of income while you are looking for a new job. And again, don't be ashamed if you have to work at a lower paying job, if you really need the money to put food on the table as you explore multiple streams of income as well.
And lastly, tip number 5 is to pay off debt. So if you are employed or you have income coming in, you want to focus on paying off your debts, especially the ones that have very, very high interest, like 10% and above, like considered like very high. So you want to pay that off as fast as possible, because then that will free up money so that you can put towards your savings account. However, if you are unemployed, you can, put a pause on making any extra payments that you are making towards your debt, and just call like the creditor, the bank, and see how they can work with you while you find a new job and you can stabilize.
Yes. So, the challenge with debt is that it costs a lot of money. And the reason why it costs a lot of money is because of compounding interest. So, like Yasmin mentioned, if you happen to be employed right now, this is a great time and you have emergency savings put aside. This is a great time to focus on paying down that high interest debt so that once that debt is gone, you can focus on putting that money towards your savings, towards investing, and specifically the high interest debt, the debt that's costing you the most money, which is usually credit cards. That's where you want to focus on right now. If you're unemployed, debt is not really the priority right now, right? You want to stabilize your income. You want to find a new job. So it's okay to pause debt payments. I mean, still make the minimum payments if you can afford to. If you cannot make your minimum payments, call your creditors, ask them for help, tell them that you've lost your job, tell them that you are struggling, and usually they will put you in a plan. They will give you a grace period, especially right now. So don't feel like, sometimes people feel really guilty, or they feel like they failed, or they feel like they're so set back if they lose their job and they cannot continue this accelerated debt repayment plan that they had, right? But you know what? You lost your job in a recession because your company is not doing well. It's not your fault. You have to find a new job, and don't feel guilty because you can't make the extra debt payments. Instead, focus on what you can do to get back to work, to earn some income so that you can get back on track with paying your debt down. The priority here is that you have food, you have shelter, your kids are safe, you have the medicines that you need, and then shift your focus back to paying off the debt when you stabilize your income. So right now, if you can only make minimum payments while you put some money aside, while you find a new job, do that. Cannot make any payments at all, please contact your creditors for help, and they will usually find a plan to support you with. If your creditor is being really difficult and you cannot pay the debt and they don't want to give you a plan, then sometimes it is what it is. As soon as you get your income back, you work with them to get back on track.
Mm-hmm. Yeah, so yeah, recession, as we mentioned, is pretty much here, and it is scary. But if you follow these tips, and you head over to Clever Girl Finance, and take a look at our free resources, that'll help you a lot weather this time. And remember that this is temporary. Historically, like, recessions are temporary; they typically don't last very long. And stay in the market. Remember that you are there for the long term, because it's gonna pay off in the long run.
And one thing I want to say, which should have really been the first point, is please do not panic. If you need to stop watching the news and stop going on the news websites, do that. If you are employed during a recession, right, things just seem more expensive. Your life continues. Like, it's pretty much day to day. You live life, you have your family, it is what it is. Things are just more expensive. You adjust your budget, you follow the tips, you get through it. If you're unemployed, it becomes tougher because now you have no income in an expensive climate. And so your goal is prioritize finding income. Again, there's no shame in getting the lower paying job, in working below your skill set to bring money in on the table. The other thing I want to say is that if you have lost your job and you have no savings and you are finding that you need to leverage debt to survive, you can still budget how much you spend so that you minimize how much debt you take on, so that when your income comes back in, you create a plan. Even before you get the income, before you get the job, you create a debt payoff plan of how you're going to pay off that debt as quickly as you can. But you can budget so that you minimize how much you're spending on debt. Just because you're spending on debt does not mean that it's free money. And sometimes people may have just been starting their financial journey and they lose their job. A recession hits, an emergency happens. They hadn't saved, but they had the intention, they were making the plans. It's okay. Don't let anybody judge you or shame you. And again, so important, do not panic. Then the media is all about panic, 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 mayhem.
Yeah.
Cut it off. Read a good book. Save yourself the stress. Call your friends and family. Watch a movie, and try to take your mind off of things. But leverage these tips and create your plans and keep investing, keep saving, right? Keep doing all the things that you do, and it's going to be all fine. So thank you guys for tuning in. If you haven't already picked up a copy or ordered your copy of Choosing to Prosper, please do. It comes out July 6th, which is in less than 2 weeks. I'm so excited. You can ask your local library to order this book. You can pick it up from everywhere you purchase your books. I am recording the audiobook next week, Thursday and Friday. So exciting. And we have the event in New York City. We would love for you to join us July 9th. You can find details on our social media, Instagram at Clever Girl Finance. And we are doing a ticket giveaway to the event right now in our stories. So head on over there and you may win a ticket to the New York event for you and a friend. Otherwise, we'd love to see you in person. It's going to be a great time. I will be there. Yasmin will be there. Esther will be there. Zandy will be there. So all the folks you see on Instagram doing the reels. And then the Clever Girl Finance community. So we would love to see you if you are in the New York City area. And thank you guys for tuning in today. We appreciate you so much.
See you next week.
Everyone, see you next week. Bye.
Bye.